G'day there. Welcome to the closing bell on the 14th of March. And we are in the middle of a pretty wild time. There's no doubt about that. Every morning I wake up and wonder what on earth has happened the night before, whether oil has had the biggest fall in history or nickel's up 100%. It is pretty nuts out there. But I think that leads to good opportunities. There can be some mismatches going on and stocks are flying all over the place. And, you know, last week, if you watched the closing bell video, you would have seen that I had a look at Paladin, which was getting hammered on the back of fears that the nuclear reactor was being bombed in Ukraine. And I was saying that's probably getting oversold here. I'd say that's not really a problem. And the bigger issue is that Europe will want to switch possibly to uranium again by not wanting to take on Russia's gas. So, you know, possibly it's bullish for uranium ultimately. And Paladin had a huge run this week. So it was around 70 cents when I was mentioning that to you. It's up around 86, 87 cents 1 week later. So there are opportunities out there. And today I want to focus on gold because we saw a huge run in gold up to the all-time high. We've been looking at gold for months, and I just want to show you the technical setup for gold and also show you just a couple of stocks that I think are really lagging behind the gold price that I think could be due to pick up. So let's check out the gold price right now. So I want to start with the long-term picture for gold. Initially, we're looking at the whole rally, and the major reason I want to show you this is the fact that when we look at the correction that gold's had over the last year or two, it's not really that large, is it, compared to the rally we've had. So the pullback has seen lots of buying pressure on the way down. That would be the main thing I'd be saying as we retest the all-time highs. I'll even quickly switch over to a log normal chart. And what that is, it's just showing you the percentage moves. So in a stock or a market that moves a long way, it can give you a better sense of what's going on. And you can see when you look at it from a log normal chart point of view, the correction we've had over the last few years is really nothing. And all that's saying is that the buying pressure really is there. Even though gold has come off, even though it's been weak, and a lot of the gold stocks have really been hammered, when you look at it from the big picture point of view, the gold price has really held up quite well. The correction hasn't seen a large sell-off, even though we saw this really strong rally here over the last few years. So, you know, I'd look at a correction and I'd be saying, you know, what's the midpoint of that whole correction, which is usually where I'd expect a correction to go to. And the correction hasn't even managed to get back to the midpoint of that most recent rally. So that's just saying that really the gold price has been strong despite it seeming quite weak. And now that things have turned back up, we have to ask ourselves, is it due to really blast off through the all-time high? And this is where you do have to be a little wary because just so often when you're retesting an old high, that's the point where you get the false break. We can see in the past, here was the old high from 2007 and 2011. And this false break, the idea of these rallies that take off, break out, that's what really sucks in the amateur traders when things break out. And then you get the false break. So it can't carry on. And that was really the beginning of that correction that we've seen. So it could be a similar sort of thing that we see in the short term, now that we're testing that all-time high again. Even though we rallied really strongly up to that all-time high, some pretty serious selling came in and smashed the gold price about $80, $90 a few nights ago. So there is selling pressure up there. You know, it's not necessarily going to bust out above the all-time high easily. You'll probably need some news, possibly around central bank buying on the back of the issues with Russia. But really, the big picture is still very bullish. And even though, you know, we may see a bit of a correction from that all-time high, ultimately, I think we are heading through, and it's blue sky above there. Who knows? I think if it does really bust out this year, if inflation's raging, if the Fed backs off from raising rates because they're scared of the volatility on the back of the Ukraine-Russia situation, which is causing even more inflation with that supply shock that's going on across all commodities as a result. I mean, the Fed's between a rock and a hard place here. And, gold might just be that safe haven if inflation really does just keep taking off and the Fed's not able to really chase it down. Negative real rates is going to stay with us for quite a while. So there is a case to be made that gold really could bust out to the upside and race towards 2,500, 3,000. So in that situation where we are seeing very strong gold price, but the gold stocks really aren't turning up. So let's switch over to a couple of gold stocks that I've had my eye on, which really are lagging in a big way. One of them is Regis, and the other one is St. Barbara Mines, SBM. So it's RRL and SBM. Just from a technical point of view, I really do like the setup. If looking at this big picture, we've got very clear waves for this Regis over the past decade or so. You'll see that it did manage to break out above that old all-time high a couple of years ago, and then it's had a really big sell-off, you can see there. And if you've been watching these videos, that I do like to see these large corrections in the price, and I'm interested once we start to see momentum turn back up from what I call that buy zone, which is a 75 to 87% retracement of the whole wave higher. So you can see that prices really are at the bottom of that buy zone, and we're starting to see signs of life where you can see that green diamond there. That will be potentially a monthly buy pivot from that area. It's got to hold above these prices here now. Well, where has it got to close above on the month? It's got to close above $1.96 this month to confirm that monthly buy pivot. And if it does, you're getting that first signs of life that potentially things could be turning back up from that buy zone of a major wave, multi-year wave. And really the target would then be back to that point of control, which is, up around $4 in Regis. So it is starting to take shape. We definitely, if gold really breaks out to all-time highs, I think, that rising tide will lift all boats. So you're probably going to see even the laggards start to pick up as their margins start to rapidly increase. And another one that's in a very similar situation is St. Barbara Mines, SBM. I have looked at that before, and I've said to you in the past when I've looked at SBM that you're probably waiting for the monthly buy pivot before you're getting too excited. And it is starting to take shape. Again, you can see that green diamond there. That's potentially a monthly buy pivot in March if it can hold around these levels. And a similar technical setup, if I'm looking at that whole wave higher from 2015 through to 2018, you can see quite clearly there prices pulling back into that buy zone area. And we're waiting for signs of life out of that area to give us a sense that momentum is starting to turn back up. The other thing to note is that old high from 2020, that spike low, sorry, that old low, got that one wrong. That is just helping me with getting a bit more bullish on this, because since it's broken below that low, it's really having a clear out of positions, a big clear out of positions. If it can turn back up above that level, that's sort of a false break of that low. And that should really inspire a bit of buying in this stock. And again, longer term goal is to see SBM head back towards the midpoint of that whole wave, the point of control. That's up above 250, 260, and we're currently at $1.60. So there's plenty of upside if things can turn around. Where are you wrong? Well, if you want to be safe, you probably want to see it. That's all the way down. You almost have to take it on, really. I wouldn't want to hold it all the way to zero, which is really the bottom of that wave from 2015. So, you're probably totally wrong if it's plumbing below the low of that buy zone. So, around 60, 70 cents, you'd hope not to see it down there. And, if gold really picks up, this could be the beginning of a nice wave to the upside. That was a really good arrow, wasn't it? So it does feel like these gold stocks, they've been lagging the gold price. Gold is sniffing at that all-time high. If it breaks out above it, these gold stocks are going to be looking just stupidly cheap. And there's a few other ones out there. Check out Brian Chew's 5 niche gold stocks. Definitely check that out if you've got the link to that from my article. But yeah, there's two to add to your list. And look, if you're interested in checking out what I'm doing, please click on the links below the video there. Looking after Australian small cap investigator and pivot trader, where I really do use my technical trading model much more than the ASI. So that's a bit more expensive for that one, but you do learn a hell of a lot more in it. So that's enough for this week. Hope you have a great week, and I shall come back with more next weekend. All right, cheers.